examples of good deals and a bad deal. Um, yeah, I can come up with something on that as well.
Okay.
Yep, yep,
We, yeah, and then after the future, if it makes sense and if we have time, I might ask a couple of questions about AI and
yeah.
how it makes sense to your business and at large to real estate, and then I'll close out from there.
Awesome.
Super, super duper. And yeah, we're recording, so I'll just edit anything later that I don't like, and if you don't like stuff that I did like, then you edit it on your end.
Yeah, no worries, man. I've done enough of these that they all kind of work themselves out. So
Yeah, right. All right. Well, welcome to Inside the Deal. I'm Trent Zeigler, your host, and this is where we break down how real operators are building, scaling, and closing deals in real estate today. Today, I'm joined by Joel Thompson, owner of Precision Equity. Appreciate you being here, Joel.
hey, what's up, Trent? Thanks for having me. Happy to be here.
Yeah, absolutely. So, just for everybody listening here today, what does somebody in your profession do? What does somebody at Precision Equity do on a daily basis?
Well, I'm the founder and or one of the founders and one of the owners, which is a privilege. But now, in the scale that we are today, I mainly focus on helping find deals and securing loans and helping secure the equity. So that's mainly what my job is.
Okay. And now you also, so you're the owner at the Criterion Fund as well, right?
Yeah, a couple of companies, they both do similar things. Precision Equity has a mix of multi-tenant retail and multifamily apartments. And the Criterion Fund is really focused on multi-tenant retail shopping centers and ground up development around the country.
Well, yeah, give me the quick backstory. How'd you get where you are today?
Man, I hope that my backstory will be interesting to people listening because I was just a day-to-day W-2 employee, was focused on kind of working the corporate ladder, had the day job, and started reading books on real estate. And these mentors just told me is, hey, you can buy your first rental house, you can make passive cash flow, and you can build over time. And I don't know why, but I just latched onto that. I was probably 24 at the time, and so that was a little more than 20 years ago. And so my start was very humble and very small. Scrounged a few $1,000s and bought a cheap Section 8 rental house. So that's how I started. But one house led to another house and another house. And then we pushed our way into a small apartment complex and then a bigger apartment complex. And then what got me into really what I'm doing today is we had sold an apartment complex and we were trying to do our first 1031 exchange. I'd heard a lot about it, I'd read about it, but I identified three properties and two of them fell out. And the only one left was a multi-tenant retail deal here in Tulsa, Oklahoma, which I still own today. And so traded into that. And the multi-tenant retail was way easier to manage on a day-to-day basis. And so we
Yeah.
started buying both. We kept buying apartments, but we also started buying multi-tenant retail, and now retail makes up a bigger part of our portfolio than the multifamily does.
Right.
So,
And now a 1031 deal, can you explain what that is?
sure. So it's a section in the IRS code that allows you to defer taxable gain on the sale of real property as long as you take the proceeds and you buy like kind assets. So if you sell a commercial retail building or a multifamily building, you can buy any other type of commercial retail building with those proceeds,
Mhm.
and you don't have to pay any tax on the gain that you made from the sale.
Yeah.
Now, there's some nuances with that people should look into and ask their tax accountants about, but it's a pretty powerful program to really, keep taxes at bay and to kind of use all those funds and invest those in the future without having to pay the tax today.
Yeah, right. Okay. Awesome. Thanks for that. Well, zooming out and talking about the industry, what are you seeing in the industry right now? Anything that's changing? Anything that's different?
Well, a lot has changed, especially since COVID. After COVID, we saw two things happen. First is interest rates plummeting to the lowest level in any of our lifetimes. The second thing is with all of the printing of trillions of dollars flooding into the market, that caused massive inflationary pressure, and so the price of assets started to go up dramatically. And so now you have cheap money. You have an economy flush with cash, and so that's going to drive values up. And
Hmm.
so I would say for a little while after COVID, we were buying at low interest rates, but then interest rates started to shoot back up.
Right.
And so we paused because, cap rates are a big driver of how we value commercial real estate, and those are not moving as fast as the rates moved up. So we had to take a couple of years off and let that adjust. So what I would say right now is going on in the market is sellers have gotten used to the higher interest rates and they're adjusting their prices, which is providing for more opportunity for purchases, which has been a little stagnant over the last few years. And
Mhm.
so we're really in buy mode right now, just trying to add to our portfolio.
So how has that impacted your business or your growth strategy?
Well, I would say our thinking is this, that there's always going to be inflationary pressure there due to the devaluing of the dollar. And so that's always going to push asset prices up in the future. And so what we're trying to do is if we can get properties to pencil at these higher interest rates that we see in our market today, then we want to buy as much as possible, thinking that in the future those interest rates may work their way down eventually.
Yeah.
And that will do two things. That will further push prices up, but it will also allow us to refinance at lower rates and improve our cash flow. So
Right.
right now, our strategy is really very bullish. We're trying to buy as much commercial property as we can, as long as it makes sense at these higher rates, and then we'll hold through a downturn and wait for those lower interest rates to arrive.
Right. So what's the market looking like right now for, you're trying to be bullish. Are you guys having issues, I guess, with your acquisition process? Like, are there a lot of properties on the market right now for purchase in your area?
Yeah, we actually we made a switch years ago to go national. I know a lot of
Okay.
smaller real estate professionals struggle with this. They feel like if they can't get their eyes on it, if they don't live near it, if they don't understand the market fully, that they can't buy nationwide.
Hmm.
And what I would encourage them to do is to think about it another way. We had a property that we were buying in Las Vegas, and I showed it to some investors, and I'm like, "Hey, what do you think?" And they did what I did. They looked around and they said, "Well, there's a brand new Chick-fil-A, there's a brand new Starbucks, there's a Taco Bell just opened, so this retail center should do really well." And so that's what I tell people is that you don't need to be an expert on the market. There's big time companies that have done all the research to help you know where to buy good real estate. But then there's also fundamentals like population growth. There's traffic counts. There's average household income. All of those things other retailers are looking for as well.
Hmm.
And so we use those metrics to help us buy nationwide. And when you're able to look at the nation as a whole and look at any given market, then you're always going to be able to find deals that fit your model or your metric. And so
Yeah.
for us, we are searching nationwide. We're looking for those properties that meet all those metrics. And we know if that we can meet all those metrics and we can deliver a model that produces, mid to upper teens IRR returns to the investor, that we're going to be able to raise the capital to buy those assets.
Yeah. Gotcha. Nice. So, what kind of tools are you using today to get all your KPIs together to make those decisions?
Yeah, so some of the softwares that we use Argus in our modeling. That helps really evaluate the deal. It puts percentages on renewals. It adds, features for commissions and tenant improvement dollars and capital expenditures and all of those things. So it allows us to make a really comprehensive model. We're using Appfolio for accounting and also for it's kind of our investor management software.
Mhm.
So it provides a platform for investors to log on. They can see the deals that we're offering. They can see how many deals they're invested in. They can see their tax documents and all the property financials. So that's something that we use. Believe it or not, we're using Chat and Claude. We've used Claude to help build and automate our model process, where
Yeah.
we take inputs from properties and build the model out. It kind of builds it for us now.
Mhm.
Uh, and then we're using Chat for document review, legal review, and potentially we're going to start using it for to help us build our offering memorandums
Mhm.
as we go to produce documents for the investors. So.
Yeah, awesome, awesome. Well, so what's working well for you right now? What are you guys doing good that your competitors might not be doing, other than going nationally as opposed to, staying locally?
I would say one thing we're doing really well is we're, connecting with retail investors in a grassroots way. So, typically, traditionally, the equity space has been reserved for very formal institutional type equity players, high net worth individuals, and things like that. But what we've done is we've grown a network of investors through word of mouth, through marketing our podcast online, and even Facebook ads, which is crazy enough. But there's large networks of investors on the internet, on Facebook, on these platforms, and if you can get in and establish credibility up front, it gives you access to hundreds, if not thousands, of potentially new investors.
Yeah,
And we're not exclusive in the way we go about it. Our minimum is 25,000, and we do a lot of offerings that don't require us to only take accredited investors. So we can take some level of sophisticated investor where we have a relationship with them, and so it really allows us to open the doors to investors that wouldn't normally have access to what we're doing.
yeah. So relationships are working well for you right now, which is
For sure,
allowing
yeah.
you to
And
expand.
reputation, you just build on that reputation,
Yeah,
and then mouth takes over.
yeah, awesome. Um, what do they say? The referral is the easiest sale you'll ever make, right?
For sure, for sure. And I hate the pitch, to be honest. I mean, we do have some people in our company that do call up investors and give them the pitch, but it's something it's not a strong suit of mine. I've always
Mhm.
wanted my experience and my track record to talk and speak for itself and convince the investors, and of course our reputation. So.
Right. Yeah. So on the other side of the leaf, what's been frustrating for you? Where's your friction at day to day?
Man, I have to be honest. I don't have just a ton of friction, but just when you buy as many properties as we do, and we manage some of them in house, it's just having really good personnel, and we do have them to. There's always going to be fires the more properties you have. When we're managing, we have hundreds, if not thousands, of tenants, and so for us, just really staying on top of the day-to-day needs of all of those tenants, that's how you're going to really maximize the value of your portfolio. You hear absentee landlord all the time. You drive by centers that the grass is too high, that the parking lot lights have been, knocked out or whatever. And, if you can, the more attentive you are in handling the day-to-day issues like that, the better operator you are, and the more you're going to maximize value.
Right. Now, how many apartment complexes do you guys own?
So we've sold a few. I think we're around 1,400 units right at the moment.
Okay.
But we're really looking to grow that part of the portfolio going forward. So I would say we have probably, maybe 100 to 150 million in apartments, and then maybe 300 to 350 million in multi-tenant retail type assets.
Yeah, gotcha. And how many of those, so that's how many you own. How many of those you said you manage some of those in-house?
Yeah, so all of the properties in Tulsa that we own, we manage directly.
Okay.
Some of the retail centers we manage remotely, but a lot of the out of town retail, we just hire kind of a best in class, in market commercial management company.
Okay.
And what's great about the retail is they're typically triple net leases, which means the tenants are paying for their share of the expenses. And
Mhm.
so when you're paying a third party property manager, that's just another bill that you bill back to the tenants. And so it doesn't really cost you anything as an owner. You could try to save that money by doing it yourself, but really it's going to cost you as a management company money to do all the accounting and to follow up with all the tenants. So it's a lower profit zone. So we don't mind hiring that out.
Yeah, gotcha. Now, talking about deals, what's the best deal that you've ever done and what made it a win?
Great question. I don't know if I'm gonna do a good job of picking the best deal, but I've got a couple I might mention. One was a retail deal in Las Vegas. It's in Henderson, and it was owned by a big REIT ahead of us, and they had bought it out of foreclosure, and so I think they paid like eight or $9 million for it. And by the time I got around to buying it, they were asking 16 million, which I was wondering, am I the idiot that's going to overpay? But we went ahead and bought it. But what was unique about it was when we walked it for the first time, we noticed a small patch of parking lot at the end of the center that was on a signaled light, about a half an acre. And we thought, let's carve that off and see if we can't lease it to some, user. Well, for a few $1,000, we were able to carve that half an acre off. We put it for lease. We got a lease with Dutch Brothers Coffee for like $65,000,
Oh, nice.
a ground lease. So basically, we just handed them a patch of parking lot. They say, "Great, we'll put our building on it. You don't have to do it," and they pay us 65,000 a year. You say,
Yeah.
"Okay, that's great, Joel. 65 grand a year." It probably didn't move the needle. But
Mhm.
what's great is that they were selling at a really low cap at the time. And so we ended up selling that for like a 4.25 cap, which put the value at about $1.5 million. And
Nice.
so in a very short period of time, with a few $1,000s of an expense, we were able to turn that ground lease, that $65,000 ground lease, into about $1.5 million in returns for us and our investors.
Yeah.
And we've done that now several times.
Mhm.
It's not something that someone told me what to do or how to do it. It was just something that kind of, hit us. Hey, we're buying these centers. If they have an out parcel, that could be worth $1 million. And I don't know why the previous owners hadn't taken advantage of it. But
Yeah.
that's an example of kind of the deals that you can run into when you're playing in this game.
Yeah.
Another one is just right down the street from me. It's a Goddard school, and I bought it for 1.8, and the tenant kind of didn't take their option to renew. And we hit up Goddard Corporate and we said, "Hey, you don't want to lose the store, do you?" And they're like, "No, we'll buy the store. We'll buy the building from you." And so we just went for it and said, "Okay, it's going to be 3.2 million."
Mhm.
And this is like just a small 8 to 10,000 square foot building. We were able to, in a few years of owning it, just paid 1.8 and sold it for 3.2.
Nice.
And those kind of deals I just wouldn't have believed existed when I
Mhm.
was, an employee back buying that first $20,000 house. I would have never thought that you could
Right.
do that. So pretty cool.
Yeah. That is cool. What kind of W-2 employee were you? Like where did you work?
Engineering major out of school, and I got on with what's called a combustion engineering equipment supplier. The name of it was Calidus Technologies, but they do combustion products for oil and gas refineries and petrochemical plants. So like if you drive by a refinery and you see a really tall stack with a flame on top, that's a flare. We designed and sold those. Basically anything that's burning inside of those plants, we were trying to bid and provide those products.
Yeah, nice. Very quickly wanted to leave that one, huh?
Yeah. I mean, it was a great job, and I
Yeah.
enjoyed it. It allowed me to travel the world, but it didn't give me near the freedom and not a
Mhm.
fraction of the income that commercial real estate has provided.
Yeah. Now talking about other side of the leaf again, what's the worst deal that you've ever done? And what made it so bad?
Yeah, let's see. Luckily for me, I haven't had any catastrophic losses. I when I got into this game, I really did think that I was going to. I thought like there's going to be a deal that goes so far south, I'm going to lose all the money I put into it. We've gotten close a couple times early before I took investor money and before I really knew what I was doing.
Mhm.
But I'll give an example of some things that can go wrong. One deal, another deal in Vegas, just not to pick on Vegas, but we bought this deal. We tried to do our due diligence. It had an anchor, Big Lots anchor, and it was 30,000 square feet.
Mhm.
And Big Lots was doing well. We checked with them, but then shortly after we bought it, they came up for renewal, and they're like, "Yeah, no, we're bailing." And what happened? They were doing so well, they needed a bigger space, and so they went down the street and took a bigger space, 50,000 or 60,000 square feet,
Mhm.
and so it left us with a 30,000 square foot vacancy, and so that's really painful. That was about 450,000 of income per year that I was counting on that now I didn't have,
Yeah.
and so you think, oh, we'll just lease it, but big box space is not really in favor right now. Everyone's trying to downsize, and so that's it. That's that vacant for like 4 years, and it was super painful
Yeah.
on our cash flow. And if we hadn't had adequate cash reserves, it could have caused a problem. And we got a CMBS loan on that. And so what that is, it's a non-recourse loan. So I'm not personally liable for it. But if you don't make those payments, they're not working it out with you. They're just taking the property. And
Yeah.
we had put down $2 or $3 million in equity in that deal, so we'd have lost it all.
Yeah.
But luckily, we were sufficiently, you know, we had sufficient cash to get us through. We were able to finally release it. But that's an example of a deal that doesn't go the way you wanted to. And I think the important thing for people that get into this business is that they do take time to educate themselves on what the downside can be. What if things do go wrong, and plan for those things. If you do that, most of the deals that I do, they work out just like we think they're going to. Sometimes better than we think they're going to.
Yeah.
But the other thing I do is I really try to envision a downside, envision the worst case scenario, and say, what if that happens? And then if I can put the pieces together to secure my downside in the event the worst happens, well, then I know I can proceed with confidence that, hey, the worst thing can happen. It's not going to be comfortable, but it's not going to take me out of the game. And that's really what I would advise people to do is make sure that you don't, do a deal that takes you out of the game. You want to be here tomorrow for the next opportunity.
Right. Well, looking forward to the future. Where do you want to be 6 to 12 months from now or 18 months from now?
Great question. What I would like to tell people is that don't get too stuck on your goals. Mine have always been changing. The first goal I had, my after my first rental was making $200 a month. And I'm like, okay, that's 2,500 a year. If I buy, 20 of these, I can match my day salary, my day job salary, and I can quit. That was just my goal. I didn't have
Right.
any bigger goal than that. But then I got in the game and I set new goals and bigger goals. And so I just want to encourage people, always be challenging yourself on the goal front, and you never know how those goals are going to change. But for us, total portfolio value for me between the two companies is pushing up on $500 million, and that's a number I could have never thought of when I started.
Mhm.
And so, our short-term goal is that we want to buy $100 million a year of real estate. That's kind of a goal that we've set for ourselves.
Mhm.
And we know if we do that, that eventually we're gonna have a portfolio of $1 billion, investable assets. And so that's
Yeah.
really that for me. That's my goal is my short term goal or my year goal, 12-month goal is to buy $100 million a year. And then I think my longer term goal is no for no particular reason, but just to grow the portfolio size to $1 billion.
Yeah. It's a milestone. It's a milestone. It's
Yeah, I
a
mean
milestone that you shoot
it
for.
is like I said. I'm not putting it's not a weird obsession with that. It's
Yeah.
just it's just something that you think I never envisioned I could be a part of something like that,
Right.
and just steady purchasing of real estate over time has allowed us to be in that position. And so it's fun to go after something bigger than what you thought was possible.
Yeah, absolutely. It's like, I mean, obviously you look like a fit guy, right? So it's like being in the gym, like, okay, I'm going up for bench press, like I can bench press 305, right? But I really want that 315 just because it's three
It's three
plates and
plates.
look
By the
clean.
way, I've never done three plates, never done it. So those that opportunity is well sailed past. So,
Oh, dang it, dang it, dang it.
but I'll leave that to the younger guys.
Yeah, gotcha, gotcha. Um, awesome. Well, what do you think the biggest bottleneck in your business right now is?
I mean, right now, I would say a bottleneck for us is uh, just continuing to find new investor capital. Because for growth, I think I feel pretty comfortable about my ability to find opportunities to buy.
Mhm.
But just continuing to grow the pool of capital that I have access to go buy those deals. And so just continuing uh, to pay out distributions, like we say, and continuing to marketing our business to bring in new people that want to trust us with their investable funds.
Mhm.
That really is the bottleneck to our growth. There's other bottlenecks, I'm sure, for other people or smaller guys that are maybe not quite where we are yet. Maybe it's a deal a sourcing problem. Like, hey, I don't know where the deals are. Maybe that could be for somebody. That was for us for a little while. That was a problem, and so
Mhm.
you have to get either. get some really good deal guys that know how to evaluate and find deals. That's what we did. We hired a few of those people, and so that kind of eliminated that bottleneck for us. So
Yeah.
now it's just really growing the capital source.
Yeah. Gotcha. Well, I guess what's the cost of not fixing that bottleneck? What's the cost of not being able to um, have that capital source?
Yeah, for us, real easy. We don't have the capital, then we buy less deals. We
Right.
Our growth stagnates a little bit, and we lose momentum. And people that we're hiring, they want to be part of a growing company, and everybody gets excited when we buy deals, we're successful, and we grow. And so for us, that's the cost of not continuing to bring in new capital.
Right. Now, shifting into AI a little bit, we briefly touched on AI previously in the conversation, but and you said that you guys were using it for a few different things.
Yeah, we're trying to.
Yeah. Are there any I guess back end processes, or obviously, you're using it surface level in the chat to, help you with your data models or help you write a report or whatever it is. Do you have like AI integrated as a part of like your daily workflow and back end processes to like stitch your technologies together or no?
I would say probably not. We don't have it kind of stitching everything together. I think we're really trying to force ourselves to learn on the fly on how it can help us.
Okay.
And none of us are real super techie when it comes to AI. So we're just trying our best to figure out
Yeah.
how it can help. And every day we're kind of finding new ways for it to do it. And AI is getting smarter. I mean, what it can help us with today, it probably couldn't have done 6 months ago.
Yeah.
I had to make a PowerPoint presentation for a small talk on finances that I was doing for a class, and the PowerPoint that it produced back in October was way worse than the one I had it
Yeah.
produced, last month. So I'm not exactly sure where and how we're going to be using AI in the future. I just know that we need to be forcing ourselves to try to use it. But I see it helping us with evaluating what we should pay for particular properties. It's really smart if you put in the address and the type of property and the maybe even the rent roll and the rents. It will start analyzing, hey, are those high for the market? Are they low?
Yeah.
What kind of cap rate should you pay for this? Like it's pretty smart in delivering some good feedback. It can also do a deep dive on, what are some of the expected growth markets that nobody's paying attention to yet. I imagine that's a question you could ask it, and
Yeah.
it's going to go to work on trying to find, maybe white papers or reports or stats that are going to help guide you to those, up and coming markets.
Mhm.
So we're trying to get all that incorporated. I don't know that we've done the best job at it, but I just know we need to.
Yeah. No, absolutely. Um, I guess what parts of what parts of your daily process seem like it might be outdated or manual that you're not currently using AI, and maybe you could put them there if you haven't already answered that question.
No, I think I can answer it. I don't know if it's the right answer, but for me, it's still tedious to go on to Crexy and put in some search criteria and go page after page after page of trying to find that gem of a property that
Right.
I think I want to work a model up on. I imagine that it can probably happen today, but for sure in the future, that you put some general criteria out and it will go and search all of the commercial real estate search engines for properties that fix or that fit your criteria, and then maybe even weed them out based on some additional criteria you use, like population growth or traffic counts or demographics or something like that. And so then it just delivers to my inbox like, here's the top three deals I think you should look at today. That
Yeah.
would be super cool. It'd be a super time saver for me. And I bet you it's going to be possible, if not already in the near future.
Yeah. No, for sure. So what's the cost of not shifting towards or not using AI in your daily workflows? What's the cost of not getting a tool like that in 6 months?
I mean, good question. I mean, time wasted, potentially missing out on opportunities, you know. Maybe not using AI might cause you to miss some important analysis that would have helped you make a better decision, either on not to buy it or maybe what to pay for it. It's hard to quantify the cost,
Yeah.
but there's definitely missed opportunity in there, and also whatever your time is worth to you as far as how much you're wasting doing things that it could do in seconds that take you hours.
All right, cool. Well, closing out here, if you had to give some advice to anybody who was getting into um, real estate, what would it be?
Let me think. I mean, I definitely think people should get into real commercial real estate. It can change your life, and there's a ton of different ways to make money. There are some barriers to entry. Being able to get loans
Yeah.
and coming up with down payments, they're tough, but you
Mhm.
can partner with people to do that.
Yeah.
But
How
here's
did you mentioned it actually before, and I've been sitting here thinking on this nugget the whole entire time that you've been talking. You jumped from owning one, you said Section 8 house, right? And
yep.
then you jumped, or you got another one, or maybe two more, and then from there, you said you pushed your way into, I think you used similar verbiage. You pushed your way into, getting a deal on an apartment complex. How did you do that?
So I mean, I'm going to spare some of the details, okay, because they're tedious. But
Mhm.
we bought these houses. We would buy them really cheap. We bought them as cheap as 15, $17,000, and then we would go and put money into them. And this was back, 20 some years ago.
Yeah.
And then we would, let's say they were worth, 50 now instead of 15 or 60.
Mhm.
And so we would go then put a loan on them. We would get a tenant and then we'd put a loan on them for 80% of that appraised value. So let's say I bought a house for 15, I put 5 or 10,000 into it. Now I'm in at 25. It's worth 60. I put a loan for 50. Now I just doubled my money.
Mhm.
Uh, and so we did that on several houses, and we kind of got ourselves to this where we had like $120,000, and we're like, hey, this is the most money we've ever had in our entire lives. Let's try to buy a small apartment complex.
Mhm.
And so when I say pushed our way in, I mean we didn't have the experience, the knowledge, or really the financial wherewithal besides that money we had raised to be getting into that game.
Mhm.
But I wanted to get into to that game. I wanted to grow, and I was willing to take risks that I may should have not taken in hindsight. Uh, so that's what I mean when I say we pushed our way in, is we just knew we wanted to grow and we wanted to be bigger, and we were kind of willing to kind of take that risk and put it all on the line. We put all that money into that deal, and we struggled with apartments for a while because we didn't know what we were doing, and we had to learn on the fly. And it was very tough. It was painful and a little bit scary. And I'm not sure I recommend people going it alone quite like that. I think if they wanted to get into a bigger commercial asset, I think the best way to do that is to partner with someone that knows what they're doing. Like I tell people for us, if you bring me a good deal, I'll cut you in on a little bit of the ownership, and I'll teach you, how to do it.
Yeah.
Um, so that's a way to get a little bit of ownership on your first one or your second one. And once you have that, once your name's on the deed and you're an owner, like you're going to be able to more easily find deals, but also more easily get loans for those deals. So
Yeah.
that's how I would advise them to do it. And then just another piece of advice that I want to leave your guys with is uh, something that struck me a long time ago that helped change my life was the size of the question determines the size of the answer. And I see so many people, they're literally saying, well, how do I retire at 65? That's literally the question they're asking themselves. And I don't know why they're asking themselves that,
Mhm.
or because society tells them they can, or they'll say, hey, how do I retire with, $50,000 in income, you know? And so then their mind goes to work on solving that problem. And so then they'll go to their financial planner and like, hey, if you invest 800 a month in your 401k, by the time you're 65, you're going to have 800,000, and that's going to result in 40 grand of income, and you can retire. And then they switch their brain off. But what I want to encourage people to do is don't ask questions that you don't like the answers to, right? find out what you want the answer to be and then figure out the question, right? Don't allow limits to limit the questioning. So for me, I just started asking bigger questions than everybody else. I had friends that were buying rentals. They're like, how do I buy another rental this year? And I'm like, how do I make $1 million on one deal? And at the time I asked myself that question, I had no idea how I was ever going to do it. But something magical happens. Your subconscious goes to work. You start looking for opportunities, for deals, for people that might be able to help you along that journey.
Hmm.
And so, I didn't ask myself how to retire at 65. I asked myself how to retire at 35,
Hmm.
and I didn't do it. I think I quit the day job at 37. But I never would have been close to it if I wouldn't have asked myself that question and challenged myself to find out the answer to what would it look like if I retired at another age than 65. So for me, I just want that to be an encouragement, that most of the time people solve the problems, or answer the questions that they ask themselves.
Hmm.
And so if you're going to be successful in solving your own problems and answering your own questions, make sure the questions you're asking, you want the answers to.
Right. And even if you're asking questions that you're shooting for the stars, like if you get halfway there, like you still got a heck of a lot further than if you were aiming for the clouds in the first place, right?
Yeah, that's right. And the only other thing I'll say is you just cannot be afraid to fail.
Hmm.
Your success lies on the other side of that failure. And it's going to be scary, and you're not going to always have the answers. And you're going to make mistakes, and you're going to lose some money.
Yeah.
And what my mentors did for me is they told me that that is the only way to get what I wanted.
Hmm.
They convinced me that what I was looking for, which was freedom and money and time, I couldn't get it without making mistakes, without becoming a different person, without failing a lot. And so then I just saw failure. Okay, that's just part of my process. Like in this failure, I obviously don't know something that I need to know, and I'm going to learn it. It may be the hard way, it may be the painful way, but I'm going to learn it. And when you view failure as a teacher rather than as a negative, I think it really sets you up to get way further in life than you would have trying to avoid failure the whole time.
Where can people find you at, Joel?
Well, you can find me, either one of my websites, www.precisionequity.com or www.thecriterionfund.com. We also run our own podcast. It's definitely mediocre, but if you want to check it out, it's just as it's written, how to invest in CRE.com. We have a YouTube channel as well if you want to watch our dumb faces talk about commercial real estate.
All right. Well, thanks for coming on today and giving us some insight into your operations and into commercial real estate. I appreciate it.
Yeah. Hey,
As I
man,
always
happy.
say,
Thanks for having me on.
yeah, absolutely. I always say knowledge is wealth. Thanks for spreading your wealth with us today.
For sure. Happy to do it.